Hey everybody, this is Uzi from the Option Selling Institute, and I put together an educational video. So let me just start by saying this video is for educational purposes only. Past results might not be the same in the future if you follow these type of strategies. But I put together this video for members. It's a private video at this point. I might make it public at some point. But for now, it's a video that encompasses so many different aspects of technical analysis that it's a mini little boot camp on how to find a trade that can produce these type of results in the future. Now, the trade we're going to talk about was a 655% winner. Now, let me just say it again. It was not a 50% winner or 60% winner. It was a 655% winning trade using LEAPS. And I'm going to get into everything in a moment. But now LEAPS are longer dated options. You could use them for calls or puts. Okay. And in this case, we used a combination of both. And I'll get into the details, like I said, coming up. But the way we designed it, we had a delta which was over 100. And for some of you that don't understand delta, that basically indicates to you how much of a price move you're going to get in your options based on the move in the stock. But what that means is we had the ability to make more with our option positions than the stock would make on each dollar move in the stock price. That sounds complicated. It's really not. I'm going to make it very easy to understand. But most important thing is the technical analysis that I'm going to go over with you in this video, you can use in the future. Again, no, not guaranteeing any results. But when you see the setups and some of the things that I'm going to go over, you can feel confident knowing that the odds are in your favor. Okay, so without any further ado, let's get right into it. And the stock we're going to talk about was a darling in 2022 to about 2024. Okay, and it really was a darling. And I'll show you again how it all set up. So the stock is called Celsius. Symbol is CELH, and it was a phenomenal move that the stock made. Everybody was buying this product. They have multiple flavors, as you can see. I mean, everywhere in the gyms to just any type of a sporting activity, people were drinking these for the energy that they give you. Some of them they claim to burn fat, accelerate your metabolism. I mean, you can see everything on it, and they have great flavors. So, I mean, it was a all the rage. Okay, let's get into the chart though, and let's see what happened in the time frame I'm discussing with you and mentioning. All right. Now, in the setup, you're going to see that this stock went from down in the 20s, okay, all the way up to $100. Let me just move my face here. So stock went from about the 20 area all the way up to $100. It went up 500% in about a year and a half. So from June 2022 to about March of 2024, the stock just made higher highs, higher lows. Earnings, is beating earnings here. You can see the gap ups. It was just killing it. It carved out a little bit of a nice pattern of a cup here and then just went off to the races from about 65, 70. It ran fast up to $100. So this stock was being accumulated by mutual funds, hedge funds, retail traders like you and I. I mean, you name it. But all along the way, you have what's called shorters, short stock traders who are betting against the success of a company, especially when it goes up 5 times, which is 500% in such a short time span. So with that, let's show you what it looked like as the top was getting put in and the end was imminent. Okay, so let's get to that. And here's what it looked like on the weekly chart. Now, on the weekly chart, okay, and I'm going to go through all this in a moment. Don't let your eyes wander yet. Just follow the price. So price is making nice, beautiful moves up on the weekly, and it gets up to that $100 price range right here. Okay, and in this area, it makes a what's called in the candles a like almost like a wick, an extended wick, which means that the bulls brought it all the way up to 100, but by the end of the week, the bears brought it back down, creating so much of a distance from the high, which was an all-time high at the time, to where it closed. And if you follow my mouse down, you're going to see. Actually, let me get my drawing tool. You can actually see that it was on extended and a very high volume. Okay, so what happens here is it's called like a blow off top, but what happened was price did fall after that. Okay, it got caught by the moving averages and it made another attempt to get through. Now, when it made that second attempt to get through and it couldn't, that's called a double top. So it created a double top. So you could see number one, what was going on here on the setup. The setup was a double top on the weekly pattern, and those are never good, especially on high volume like we had. And that usually indicates that there's going to be some trouble down the road, because if price can't come back very shallowly, okay, and then reverse and come back to make new highs, it's probably going to test the previous pivot point, which was here. And in this case, it didn't hold up. Okay, so what we had was a break. So number two, I want to go through what was going on. We had a price and RSI divergence. So this is one of the technical things I look at. We had price making another high, a similar high, but down here we had the RSI, which is this white line that's coming like this, which was in overbought territory. Anything over this dotted line is overbought. It was angling down. Okay, that's called divergence, as the price was making another high. So this was making, it was matching the previous high. So we had a divergence right there. So that's number two on the list. So the third thing that we looked at and saw was that we had what's called a MACD, moving average convergence divergence crossover. And that's right down here. This is the blue line crossing over this red signal line, indicating on the weekly, again, that there's trouble coming up down the road. When we had this when we had this pull down right here, it created a crossover. Those are never good on the weekly, especially when you have the histogram, which are these red areas down here getting larger. So it broke the zero line. If you can see this line here, that's the zero line, and when it goes below it, that indicates trouble coming down the road. So we had that going for it. So that's three things right there. Now we had the RSI in the overbought territory, like I mentioned just a second ago, and it was up there making multiple pushes up into the overbought territory. But if you notice, as the price was making this equal high, it couldn't get overbought. So there were not as many buyers showing up to the table. And whenever that happens, when you have less buyers and it's making similar highs, okay, it's going to run out of gas. Picture your car trying to go a certain distance and you just don't have enough gas in the tank. So you run out of gas and you start to slow down and run out of gas, and the engine stops. So that's what happened. The buyers failed and it just started to fall. The RSI was falling along with the price. Okay, so that's the fourth item. Then we have a confirmation of volume. And what I mean by that is, if you can see it, it was normally trading kind of low volume all along the way until it was making these spurts up higher. Okay, as you can see it, when it made this big rip up, it had a nice spurt of volume. Over here, this volume bar was when it was making this run up. But when we had this down volume, this down bar is coming here, we had also increased volume. That's never good when you're breaking key technical levels, such as the MACD cross, okay, such as the RSI divergence with the price. So that was another warning sign. So we had five going for us right there. Now, you can't see it on the weekly chart, but what I'm going to do is flip to the next chart, and I'm going to show you that we also had an open gap on the daily chart. Now, 90+% of gaps on the daily charts get filled. And I'm going to show you where that gap was. It's over here to the left. But we also had, what was going on was we were breaking multiple support zones. Okay, now previous support that had held up nicely. So right here, we had previous support holding price on the weekly, and you can see right here, it did not hold. The second level that it was supposed to hold was this area right around here. It did not hold. The price would continue to go further. So once it broke through here, the last line in the sand was this first area of major support. As you remember, I was saying price had gone from 20 to 100, but when it had come down a little bit and formed a little bit of a cup, this is that cup. And here's where it had found support at that time, which you can see is below this area of support. So this was the final line in the sand, if you will, that if it didn't hold here, it was probably going to go down and test lower prices toward the $20 level again. But lo and behold, price did find support right there, as you can see. And I'm going to show you now on the daily time frame on how this all looks, because it gets even better. Okay, here we go. Here's the daily. Okay. And a couple things I want to bring your attention to. Okay, first of all, we have that open gap right here. So very key on the chart is this. Once it broke support one, okay, it was going to take out that gap. So that was mission one, was once it broke support line one, it was going to get into that gap area. So that was a gap fill accomplished. Okay, so that 90% odds of a gap filling, it occurred right then and there. Once price didn't hold up on two, we knew it was going to hopefully find support at that level three. Now, this is the area where it wound up turning from. Okay. And this is all just similar from the other chart. But the key I want to focus in on in the next slide is the entry, because this is the setup. These are all the same 7 points that we just talked about. But I want to talk about now the actual setup that got us into this trade. And here it is. Now, we have a few things going on. First of all, in area number one, and I labeled these, then all of these numbers line up with what's going on here on the left. So area number one was we had a huge gap up, and it was on great earnings. They turned the CEO and the company turned it around, and for whatever reasons that the stock had fallen out of the sky, I don't recall what that was, but it doesn't matter. The price now was turning around, and you can see that it gapped up on huge volume right here. Okay, this was right before the earnings, and you can see this is red volume here only because it did close on a red candle, but you still have a huge gap up on earnings. Okay. Now, the second portion of what was going on with this setup is that we had a very small, very mild and controlled pullback, but it was on very low volume. Okay, very low volume pullback, meaning it wasn't being brought down from this gap up level on huge volume. It was somewhat elevated only because there was a lot of trading activity, but it wasn't on huge volume. You can see how the volume dries up. Okay, that's number two. Now, number three, we have the pullback coming down. I'm sorry, let me go back to number two. It was low volume pullback, but right to the middle of the Bollinger Bands. Now, these red lines here and here is the upper and lower Bollinger Bands, upper and lower, but it also has a middle Bollinger Band. And a lot of times the middle Bollinger Band will kind of follow the 20-day moving average or 21 EMA on a stock. So not only did it pull back on light volume, but it pulled right back to the mid-range of the Bollinger Bands and the 21 EMA, which I'm going to talk about too, and then in level three, number three. So we had that going for it. Now get to number three, and we have the 21 exponential moving average and the 50-day moving average. So we have a lot of stars, if you want to call them that, lining up for us. We have a pullback to the middle Bollinger Band, we have a pullback to the 50-day moving average, and a pullback to the 21 EMA, exponential moving average. Those are three huge technicals that bode well, especially for a stock that's coming back to life. Okay, this shows that every time it starts to come down, buyers step up, and they don't let it come all the way back down to the lower Bollinger Band, nor do they let it break these 21 and 50-day moving average. Okay. Now, number four, we saw price move and rally up to test the 200-day moving average, which is this brown line. Okay, another thing that we like to see is a stock being able to get back to the 200-day moving average and overcome that 200-day moving average, because there's a saying in stock trading and options trading that nothing good happens below the 200-day moving average, meaning price finds it very hard to rally, and any rallies are usually sold into by the shorts or profit taking by the longs. So number four was great. We came up to the 200-day moving average. As you can see, at the first attempt, it did not get through. We had a little bit of a pullback, but where does it pull back to? The blue line. The blue line is my 8-period moving average. So it pulls right back to the eight, and this is, by the way, this is the daily chart. Pulls right back to the 8-period moving average, and from there it bounces back up. Okay, pulls back a little bit to the 200-day moving average again, but by now we've got the middle Bollinger Band catching up to it and the 21. Again, when you've got all of these extra moving averages and Bollinger Bands coming behind for support, catching the price, and we're on the 200-day, This is huge. And this is right around when I think we got into this, and I'm going to go over that entry with you too. Matter of fact, the entry was just a little bit further because I waited for more confirmation. So once it came back to the 200-day, the 21 EMA, the middle Bollinger Band, it started to base higher a little bit. And all the while it's coming up here and here, as you can see, if you look to the left, it's overtaking all of these previous areas that price could not get through. So on the daily, we're making higher highs and we're making higher lows. And I'm going to show you that when we get to the trend lines. But this is huge. Okay, number 5, we have what's called a golden cross. Now, that is when the 50-day moving average crosses up and through the 200-day moving average. And that happened on April 30th. Okay, huge. That's a huge technical indicator right there. That price, not only was it improving, but now it's showing that it has real sustainability to make some big moves. Okay, and this is where the price wind up going. But let's stick to the program here. So number 6 was just, and you'll see there's multiple sixes. That is just price having multiple pullbacks to the 50-day moving average. As you can see, price took off here, kept running, couldn't get back to the 50-day, comes back to the 50-day moving average back in August of this year, and then gaps up again on earnings. But you can see multiple attempts, retests, it's called, of the 50-day moving average. And every time it did, it bounced right up off of it. Those are huge technical indications that the stock is healthy. It's just doing minor pullbacks to the moving average. And those are great entry points for longs if you want to get long, if you want to add to your long position, if you want to sell puts, sell premium, put spreads, put credit spreads. I mean, these are just multiple areas of adding to this position if you were in it already or if you wanted to establish a position. Okay. Now number 7 is not on there, but it's just something I want to talk about. So number 7 is where we exited, and I'm going to get to that next in the next screen. But from here, you can see what's going on. It's the stock is just showing technically that all of the technicals that I look at, and I'll go over them again in a little bit, they're all holding up each and every way that they could and supposed to along the way and going out in time. So once you have all of that, you've got the recipe for a huge, just huge winner. Now let's go over the entry though. The entry was right here on April 25th. And what I saw was that, again, it was kept coming back to the middle Bollinger Band and the 21 EMA. But this was where I decided, let's put a position on. And I was analyzing the best positions to really, to get long on this thing. We could have bought stock. We could have bought calls. But what I decided to do was get long-term dated. So again, we bought into March of 2026, and it was April of 2025. So it was almost a year, just shy of a year out that we were giving ourselves time for this stock to work. Okay. And what we did was we bought a deep in the money call. Okay. So the stock price at this time is about $37. If you look to the right, we bought a deep in the money call, 27 and a half. But we not only bought a call, but we sold a LEAP put. And these are LEAPs because you can see the date is March 26th. And over here, you can see the date that we entered was April 25th. April 25th, we enter, and March 26th of 2026 is the expiration. But we bought a 27 and a half call. We sold an in the money put. Now, what does that mean? That means we were selling a put that was above the current stock price. And again, the current stock price was about 37, but we were selling a price over here at 40 because I felt that the stock being where it had fallen from 100, that in a year, it had every reason to be above 50 to 60, maybe $70 per share because we are in a strong uptrend. All of the major hurdles seem to be out of the way. It's holding not just the short-term moving averages, it's holding the 200 and the 50, and we had positive looks going forward. So that's when we got into the trade. Okay, and then here's the actual price that we paid. We paid $3.85, and this is just one contract. Now, I put this in multiple accounts that I manage, and some of the accounts I put more than just one contract. But this was the alert that I put out to the members in the Discord, and it was for one contract of each. Now, this was the net. So by buying the 27.5 and selling simultaneously the 40 put, it only cost us $385 to put this position on. Okay, and let's get into now what went on after that. Now, the key I want to go over in this slide is this. Trend lines. Trend lines are some of the most important technical aspects of technical analysis. And and trend lines work in the short term and the long term, meaning they can work for you from this area just in this little short space here, or they can work for you in long time frames. And not only that, they can actually live forever because let's say 3 years down the road, price of Celsius keeps going up, down, and just trending up and down. Okay, we're going to see how these trend lines come into play. Okay, but you can do this if you look back on other stock charts, how if you draw trend lines, let's say looking at a certain time period, let's say in 2022, and then just extend them off to the right, you can see how they come into play in 2025. Many times you'll see how phenomenally that they actually act in the current time frame. But what I want to show you that I was looking at and analyzing at the time is that when we broke above this trend line right here, it did so, and it needed not only strong volume, but it did so on a gap. It broke two trend lines at the same time. This descending diagonal trend line and this descending diagonal trend line. And again, technical analysis is amazing because it had two trend lines to overcome. And as you can see, it couldn't just do it on its own, right? It couldn't do it on regular trading. But what did it take? It took an enormous amount of volume and a gap up above it. But watch what happens on that pullback, which I was discussing before, but we didn't have trend lines at the time. It was pulling back to moving averages, but it was also pulling back to those trend lines, which is huge. It never violated those trend lines every time when it pulled back. As you can see, it tried to get through, get up, go up, and it couldn't get through this descending trend line until it pulled back to this new uptrend line. Then it had the energy, it built up the energy in these few days that it was sitting there, broke up above it. That's when it began running up to the 200-day moving average, came back down to it, and it tried to hold but couldn't. But when it came down to this trend line, which again, this trend line is valid from right here. These two, three touch points created this trend line. Shoot it out into the future, and not only did it hold it here, it held it here, and it held it on this most recent pullback before the gap up. So trend lines are just really the secret sauce. Now, there are all kinds of trend lines. So not only did this trend line create an uptrend here, which it did violate, but it began to serve as resistance as price kept rallying off this lower support trend line. So this trend line, which had been support at one point, became resistance, and it's still resistance. Okay. Now, I'm going to go over in a moment when I exited this trade. We did exit this trade, but this is just a show of how trend lines are so important in technical analysis, and they're not the hardest things to grasp. I do coaching, and this is one of the first things I always go over with my clients is that we have to learn and master trend lines because that's the most important part of getting off the ground with technical analysis. Now, I added some trend lines, and you can see in this case why I exited the trade. I'm going to show you. First of all, I want to show you that while it's been making all of these beautiful tests of the moving averages and the trend lines, price has been going up. The RSI has never gone into overbought territory. It's approached overbought territory, which is this upper dotted line here, but never really got into it with any significance. Okay, not until this past breakout above here, and that's when it entered overbought territory. Now, again, we've been in this trade all the way since, like I said, April. We've been in this trade for 111 days. But when I saw that it had 7 up days in a row, that it was up against horizontal resistance on the daily chart, and it now had entered overbought territory, that's when I decided to pull the trigger and close this trade. We had approached multiple resistance levels, and it overcame it. And we had been making huge profits on this that I decided I don't want to sit in a pullback down to this trend line, which it could bounce back. It could pull back all the way down to $50 at this point, $49.50. Okay. Why give up almost 7, 8 points, 8 points or more actually? Okay. Why give those up and sit in a pullback, hoping it holds again, especially that we're in an overbought territory. So this is where I decided to pull the trigger on this trade. Mission accomplished. 655% profit, and we took it off the table on Friday. Just a huge trade, one that is definitely for the record books. In the sense of long-term hold, we held this trade for 111 days, one of the longest holds we've ever held a position in the Discord, and it was huge. While we have made higher than 660% on some trades, this one it was just all the technicals were just so beautiful, and it was a leisure trade. It wasn't as if we really had to ever sweat the trade or manage the trade in any way. We were selling covered calls against the trade. By the way, I didn't even factor into this equation how much premiums we took in on the covered calls. I'll do a follow-up to this video. To be honest, I totally forgot to add that up. All along the way, we were selling covered calls, weekly covered calls, or every now and then when it was opportune to sell them. So we actually made more than 660%. I actually shortchanged myself on this video, but we profited $2,544, again, using just one contract. I showed you the entry, 385, and here's the exit. So actually, when I took this screenshot, we were up 660%. And I don't know what this actually winds up being when I got executed, but we killed it on this trade, and it was something that we're going to look to do again in another stock soon. I've been scouring and scanning for that, and I've got a couple of candidates. So I mean, this was just a huge trade, and ones that can be replicated. Now, I just want to go over a couple of reviews from my Discord. I do run a Discord. We're mainly premium sellers, but we do long certain positions depending on the setup. But I've got just a few reviews I want to go over with you. We are, by the way, a 5-star rated Discord. These are trades we put on. This is the 4th retail company that I put a trade on and an alert out and even a video on where there were massive profits made. The first 3 stocks were Dollar Tree, Dollar General, and FFIV, Five Below. Those all were huge winners. I believe this one, though, was even a bigger percentage gainer and winner. But these are just a couple of reviews, 5 stars from these members. This one's a month ago. This one's 3 months ago. And, I'm not going to read them all, but just that, we got a great community, that everyone here is helpful, not just myself. Here we say that he says that he's been here 9 months. He cares about his members. Every member to me is like family. So I'm always there if you have questions. Even if you have questions about your own trades, I can help you out sometimes without having to do a conference call or a coaching session, but depends. And saying that the majority had been winners. Now we do have about a 95 to 97% win rate. So I mean, we do very well, and we have room for more traders. We're looking for some more traders that are either experienced or newbies. So if you're interested, you can see the links down below, and be happy to give you the link to get set up with us and start making money with us this year. This is the link if you wanted to join us, or you can reach out to me on Twitter. If you have any questions, don't hesitate. But I hope this video was helpful. I hope you learned something in this video. Please give me some comments down below. I read and answer all your comments. And if you did find this video helpful, please like and subscribe. It helps me to see that I'm doing things that you guys want to see out there. And if you have any questions, again, don't hesitate to reach out to me on Twitter or in the comments. So with that, I wish everyone a great weekend and great trading year. We have about 5 months to go. So let's kill it from now to the end of the year. And I'll see you guys in the next video. This is Uzi signing out. Have a great weekend, everybody. Thanks for watching.